Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis.
Hey, it's David Stendhal with tonight's Deep Dive. It is November 16th, 2017, and I thought I'd talk about corn. With the ETF is C-O-R-N, corn, and the trends right now, as you'll see in the presentation tonight, that they're all to the downside, short, intermediate, and long term, no ambiguity on that side, and the technical rating is to the downside. The reason I'm bringing this up is that we got a signal here on the elastic level, which had a slow low alert. And so if we take a look at Tradestation, I'll show you first a different chart here real quick. This is a chart for corn. These are daily bars going all the way back to 2013. And the reason I'm showing this to you is that you can see that it's been in a long established downtrend. No surprise, especially if you've traded. Second thing is that what we've applied here, this yellow line, where you see kind of over the course of the open, high, low, close bars, is something we call the signal zigzag. And I'm only showing this because you can see that it has been in the most recent downtrend and has been in it for a period of time. It's not to say that it's ending tomorrow. It just simply says that it's been in this extended trend. And whenever we have an extended trend, obviously eventually it's going to pop to the upside. So all I'm showing to you right now is that it's been in the most recent downtrend for a period of time. The fact that, again, these are daily bars, this is still corn, you can see that we are generating some elastic level pivots. And those pivots have a tendency to tell you that the market is still, oversold. It is giving a clear indication that we're close to something, but maybe not necessarily there. So our early warning signal is always going to be in the elastic level. The follow-up would be the wave level, but at least the elastic levels are beginning to say, hey, market has gotten a little to the extreme. You should start paying attention to this market. So if we take a look at some things on our website. First, we've got the depth gauge, kind of similar to that first chart that I showed you, where we've been in an extended trend to the downside. And all this blue, think of this as water and the volume of water that is, on top of the price action, just keeping this thing down. And a lot of times, like a contrarian indicator, the more blue that you see, eventually things start to reverse course. So all this is showing is that with all this blue and the downtrend to the black line, is that the market has been in a bearish trend for an extended period of time. And the sheer fact that we've got a lot of blue, the actual what we term as the rolling underwater volume index, that is actually very, very strong right now. There's just a lot of weight to the market. So it's still bearish. It's still following. This is a longer term type indicator. So just another thing to really look at. The other thing is that I'll show you the trend level. Trend level for the 40 separate markets. You can see that we've got a couple lumber and cattle that are strong trending to the upside. And one of the sole major bearish trending markets is still corn. In fact, it's the only one that is well, not the only, but the only bearish one that's in a strong trending bear phase. And so we don't have a lot of markets like that. The other thing I'll point out is this aggregate, which I'll be talking about a little bit more in probably future presentations here. But right now it's getting close to 100, and that represents an aggregate of all the markets, all 40 markets, and the trendiness to all those markets. And when that number starts approaching 100, which is actually on the low side, that tells you that there's a very few major trends that are out there. And that means that the markets as a whole are, for the most part, just kind of meandering around, and that eventually that they're going to explode. So we want a low number in general for a lot of the markets because it bodes well for some really good action moving forward. But the only one, at least on the short side, that's really strong is in fact the one that we're talking about here, corn. So you can get an idea as to how it references some of the other markets that are actually out there where it's got a strong trending phase to it. How are we trading it? Well, right now the systems are short corn. You can see that -2. We've got two separate systems that are short. The net positions for the two systems is that they're up around 4 grand or so. We've got soybeans here, which are flat with obviously no profit, and then we've got wheat with one system that is short, and it's got an open position profit of $225. Nothing major. But corn, we've been trading pretty well as of late, and the fact that the market has actually sold off is good for us. But how long is it going to last? So what we have here is a corn seasonal chart, and I'm pointing this out not to say that our systems are going to reverse course right away, but historically in this environment, in this period, maybe not tomorrow, but in this environment, we typically see some type of a bounce before the end of the year. And so this is a 5-year chart. This little triangle, this black triangle, is where we are as of yesterday, and we would start to expect some type of a pop to the market. The 10 years show the same thing, but it then kind of trickles off, and it's the tail end of the year that we really start to see some major moves. So you can see there's a little bit of a difference. The 5 years, which are the blue, it tapers off at the end of the year, but the majority, the longer term charts, specifically the 10 and the 15, we have a tendency to see strength into the end of the year, but a little consolidation until we get into December. So there's still a little bit of variation between what should be taking place, but the point is that eventually here, whether you look at the short-term charts and we expect a bounce, or you look at the longer 10 and 15 years getting into December, we'll see a bit of a bounce. Either way, we're still short. Still looking for potentially more downside here. We have no targets because we're really at an extreme low, but I would suspect that with the elastic level alerts that we want to be paying close attention to this thing because it could reverse course. So we're short, but we're expecting some type of potential reversal. So keep that in mind as to how you're going to be trading this. And the elastic level could, as I mentioned earlier, could be just early, and we're just simply waiting for other conditions. So it's a foreshadowing that you should really be paying closer attention to your short positions in corn. So that's kind of the upside to what it is that we're talking about today. We'll take a look at perhaps some other markets tomorrow. And then during the Thanksgiving Day holiday that week, I will not be doing any videos, but we'll certainly be maintaining and doing all the things we always have to do with the website. And then come next month, we're going to be doing a lot of webinars. Finally got some new software. It's going to allow us to do some live webinars, and that way we can get some feedback from people. We can start looking at individual markets. So if you don't want to look at corn, you want to look at another market, we'll do some live presentations and try to go into our indicators, whether it's the seasonal information or some of the indicators that we're showing here on the elastic level, on the deep dive, meaning elastic level, wave level, power level, along with others that we have not incorporated into this presentation yet. But we'll start to do a lot more on that side and be able to really keep people up to date with the systems, the markets, and how we interpret things. So I appreciate you watching, and we'll look at some more markets here soon. Thanks.